Thank you so much for having me. I'm the AVP of Consumer Lending at Ufirst Credit Union. My financial career or my business career began at a payday lender called CheckSmart, which helps people cash checks as well as maybe predatorily lend to some people in some financial stressful situations, which led me to credit unions in general. Credit unions care about their members and the people that they serve. We're able to provide better rates, both on the savings deposit side as well as the loan side. And we try to educate and help those that we serve to lead successful financial lives. Finances can be very scary. And we're going to talk a little bit about credit cards today, which are scary if you don't have some information about them. Fortunately, most of us have probably heard horror stories associated with credit cards, people getting themselves into trouble with it and not being able to get out. So one of my goals for this presentation and this workshop is to help you understand how to utilize a credit card properly, how to use it, because it is a great financial tool, but how to keep yourself from getting yourself in trouble and paying on them forever. After I worked at a payday lender, I went to a different credit union where I spent my time in an actual branch. And I spoke to members as they came in and asked for loan applications and for credit cards or auto loans or anything like that. And I got to discuss with them and look at credit reports and see where people were in their life. And it was scary how little knowledge some of these individuals have. And so kudos to the University of Utah and Financial Wellness Center for taking time, and kudos for each of you for taking time to understand and learn more. May have some extra credit involved with it, I heard, but that's okay. Sometimes we need an incentive to do things that we should. And then after I spent some time at that other credit union, I won't mention it, it was a great institution, found myself that I didn't really fit there with their culture and their strategy and their goals. And I found what was at the time University Credit Union. We've now since rebranded and we're Ufirst Credit Union. But what a great opportunity. I was speaking earlier with Beth about a lot of our decisions that we make as an executive team or as upper management. We always bring up a couple of things. We go, how is this going to impact our student population at the University of Utah? And how is this going to affect or impact our international students? And it's fun to be part of an organization that recognizes the younger generation, if you will. I can say that now because I feel old. And what impact and benefits you will each individually provide and as a whole provide to the society and environment we live in. At Ufirst Credit Union, I began as a loan documentation specialist, which was associated with consumer lending. I made sure all the documents were correct. Then I moved into underwriting. And then I moved into management, where I managed both the indirect lending team, which is deals from a dealership to buy an auto loan or to buy an auto and do it through a finance. And then the direct lending, which handles credit cards, personal loans, student loans in some aspects, merchant lending, all that sort of fun stuff. So I loved lending. And it's important to understand how to use lending properly, because if you don't use it properly, you'll get yourself in trouble. So a little bit more about Ufirst Credit Union, and this was kind of spoken of in the introduction, but we're a full service financial cooperative, which means we are owned and operated by the members. So when you open an account at Ufirst or any other credit union, you become a member and you become a part owner of that institution. While banks, they answer to stockholders or shareholders, we answer to members. We were founded initially in July 1956 on the University of Utah campus. A bunch of professors got together and thought, hey, let's pool our money together and our resources so we can help each other out. It's basically what a credit union does. From there, they invited employees of the University of Utah, students of the University of Utah, and as it continued to grow, we reached out to all of Salt Lake County. And now we're proud to serve anyone who lives, works, attends school, worships, or volunteers in Salt Lake, Utah, Davis, Wasatch, Tooele, and Summit counties. We serve over 100,000 members. We have 20 plus branches ranging from St. George, Utah, up to North Bountiful with plans to expand a lot more. And we're a nearly $2 billion company, which is exciting. As mentioned, I'm a high school football official. So on Thursday nights and Friday nights, I get to stand with stripes on a field and get yelled at by a bunch of parents and coaches who generally don't know the rules of the game as well as they think they do. Now, I will say it's a lot less intimidating than standing here right now, but it's interesting to consider so many people think they're a specialist or understand the rules of a game that don't quite. And a lot of times it happens because they heard it from here or they heard it from there. They heard it from their aunt or their uncle. You know, they watched football growing up in their house and they just know the game, right? And that's a lot to do with lending. A lot of us think we understand it or we understand bits and parts of it, but we don't really understand the full scope of lending and consumer lending. And that's especially true with credit cards. So as I said earlier, hopefully I can share some information that will help you be less apprehensive about getting a credit card and using it, but learn some tactics to use it properly. In football, it's funny because you sit on a sideline, and I actually did this with the coach once. It's probably not the best thing. This was way back in the day when I was doing Little League football. That's on Saturday. Talk about parents trying to relive their youth, right? And little Johnny who's just got a helmet and cleats on it, basically looks like. But I was talking to a coach, and we were in a pretty good relationship at that point. His team was winning by a lot. It didn't matter. And I said, hey, let's do an experiment just for the fun of it. On this next play, no matter what happens, yell at me like there should be a penalty called. Yell, there's a hold or something. So if you're familiar with the game of football, holding happens on every play. So the play developed, and the coach yelled, ref, you got to be kidding me. You got to throw that holding call. And it was like wildfire. Within about 30 seconds, parents were screaming at me for missing this hold call that we had totally made up. Sad and kind of embarrassing, but you see that in the world today with general knowledge and information. So one of the things I would challenge each of you to do, I feel like I'm an expert in my field. I take a lot of time and effort to understand, but I don't know everything. And I will share some information that I think is maybe best practice or some information that I feel is correct. Maybe it's just for me personally, but that can hopefully benefit you. Do your own research, take your time, Google information, go out there and search it, reach out to other individuals, because so much information we hear from one source and we believe that it is the gospel truth, and that's a fact. So not only from my presentation and finances in general, get multiple opinions, get multiple people involved, and recognize where that information is coming from, and make sure you trust that source. So let's do a quick overview of some of the plastics that are associated with finances. We got three main categories. We'll start with debit cards. Who here is familiar, has a debit card? Most of us, very good. A debit card is associated with your checking account for the most part, right? This little piece of plastic allows you access to that money pretty much at any time, anywhere, for any reason, with some restraints. So when you swipe that card, that money comes from that account. So there's no credit associated with it. You're not building any credit history when you use a debit card. There's no interest. You're not going to pay the bank back for use of that card because there's generally no annual fee as well. You use it for free. It's a service and a benefit. There are no rewards associated with that. You don't get rewards points for swiping that card for the most part. There are some debit cards out there that do offer that. Not usually though. And then there's no monthly payment because you're using your own funds. What are you going to pay on, right? We'll go into a little bit more depth in debit cards on the next screen, but then credit cards. Credit cards are different. They are tied to a limit. You have to be approved in one way or another for a credit card, and it's tied to this limit where you have access to borrow funds up to that limit at any time. Because it is a credit limit, it reports to your credit. You're building credit as you utilize a credit card in one way or another. Even having a credit card, letting it sit on your credit report and not touching it is building your credit. There is interest associated with it though. If you use that money, you're borrowing money. We'll talk about a lot from Ufirst perspective. If you use my credit card that I've issued you, I expect you to pay me a little extra on the back end because you're utilizing my funds to do those. Because you're borrowing money, you're going to be expected to make monthly payments. There's a potential annual fee. Ufirst doesn't charge an annual fee on the credit cards, but a lot of credit cards do charge an annual fee. And there are rewards that could be associated with this credit card. Now, there's a third card out there in the industry. It's actually a type of credit card, but I put it in its own category. It's called charge card. Very similar to a credit card, but with a few differences. This is also tied to a limit for the most part. There's some charge cards out there that don't have a limit. Those for the super wealthy, on the 1%. That there's so much trust in their purchasing power that they know they're going to get paid, right? These also report to credit, so you can build credit with them. There's no interest associated with these cards, and that's because you're required to pay the full balance or whatever you do at the end of usually a month's time period. A lot of businesses use these for, say, gas cards. So everybody swipes their gas card with the charge card, and at the end of the month, their accountant, their payable department or whatever is required to pay that balance 100% in full. Now, these usually run with very high annual fees or higher than credit card annual fees, but they usually have some really good rewards, better than credit cards. There's a couple out there. There's the Plum card. I believe that one's from American Express off the top of my head. Amex does a lot of charge cards as well. They have their place, but we're not going to talk much about them besides just so you understand that when somebody says a credit card and somebody says a charge card, there is a difference. Let's talk a little bit more about debit cards. So as I mentioned, a debit card is associated with your checking account. So if you want a debit card, it's really easy. You go into your local Ufirst branch or financial institution, you open up a checking account, which usually requires some identification verification, giving them your information and making sure you are indeed who you say you are. They open you up a savings account at Ufirst because you need to be a member, which requires $10 in an account. You open up a checking account and you put funds in there, and they give you a little tool called a debit card to utilize those funds. It's really simple, it's really easy, and it's very beneficial. Because you're swiping your own card and you're using your own money, like I mentioned, there's no fees, there's no interest associated with them, but you could run into some charges because of them. And that's if you try to use that debit card when you don't have any money available. And there's two things that generally happen when that occurs. First, you could have something called an overdraft privilege, which is basically the credit union or financial institution saying, don't worry, we'll cover your charge because you're sitting in a restaurant on a date and something embarrassing if it doesn't through, but we're going to charge you a fee to do that. Generally, market anywhere from $20 to $30 is that fee. The other thing that could happen is it gets declined outright. That charge doesn't go through. You're still stuck in a situation where we're going to have to make a payment. And guess what? That's hitting your financial institution, and they're going to charge you a fee called a non-sufficient fund fee, which is generally $20 to $30. Probably better to make sure you get that charge covered and deal with that penalty later because you're going to get charged both ways. That's a personal decision on your point. Some people are like, I want my card to be declined so I don't make any charges. As kind of a side point, you can actually add a line of credit to your checking account, which instead of going to a fee-based structure for making and covering these additional charges that you don't have money for, it actually goes to a line of credit, which pulls the money, and instead of paying a flat fee, you just pay with interest accumulated plus the money that you borrowed from that line of credit. Very similar to a credit card in that aspect, though. Now, as many of you have probably gone and used your debit card, you usually get an option to go, you want to run it as a debit or as a credit? For the longest time, I was like, I don't know, what do I do? Like, I stood in front of a little machine and been like, what's better? And lady at Harmon's is like, I don't know, just select one. Do you know your PIN? If you do, then do debit. If you don't, then do credit. So I'm going to tell you a little bit about the difference between the two. So if you run it as a debit, there's a couple things that happen. It happens through a system called the EFT system, or the electronic funds transfer system. Okay, so it runs through a different system than a credit transaction. This means that those funds come from your account almost immediately. That transaction happens almost immediately. So you can see that money gone from your account. Because you're utilizing it through the system, you're allowed to get cash back. So if you are in a grocery store, you want cash back, run it as a debit, you have the option to get cash back. Interestingly enough, this system is cheaper for merchants to use in most situations. So if you really like the merchant, you want to save them some money, make sure they get a little bit more profit, run it as a debit. Usually requires your PIN. So if you don't know your PIN, don't try. And if you don't know your PIN, that's probably a problem. Go see your personal banker, right? As you run it as a credit, it still comes out of your account or your checking account. It just goes through a different network. It goes through your credit card, the credit company network. Most debit cards run off of Visa. So it just goes through the credit card Visa's network, which means your account won't see those funds immediately withdrawn. What you'll see is a hold. Basically, it's saying these funds aren't in your account, but you're not allowed to use them anymore. Because it's going through the credit network, you're not allowed to get cash back. It actually costs the merchant a little bit more money. Visa, massive company, can charge higher fees. And it may require a signature. Let's be honest, usually it doesn't anymore. Anyway, so those are the two differences. If you're ever curious, comes out of your account, one's a little bit faster, one's a little bit slower. Really, it doesn't matter. Unless you want to get cash back, then remember to go debit. So I wanted to give you a little background on debit cards just because that's the other card that's primarily used in the market. But now we're going to get into the meat of it, which is talking about credit cards. 4 major credit card companies in the world today, or at least in the United States. You've got American Express, you've got Discover, you've got MasterCard, and you've got Visa. I think Visa is the most common. Ufirst utilizes Visa. It's a great company, so are all the others. So that's why when you go to a store and they see on their cash register the Visa sign or the American Express sign, what they're telling you is we accept payments through this network. So if you go into a company and it says we do not accept MasterCard, you can't use your MasterCard, so don't try, which is kind of embarrassing, especially if you go out of the country. Visa is not as readily acceptable in some situations. So for me personally, I utilize 2 credit card companies. I have 2 cards in my wallet. One's Visa, one's American Express. That way I can always be certain when I go to a merchant, between the 2 of them, I'm 99.9% sure that I've got a card that will cover those costs. Credit cards, there's 2 types of interest associated with credit cards. There's a fixed rate and there's a variable rate. Fixed rate means your credit or your rate or interest rate associated with your purchases is at a fixed amount, 15%. It's not going to change based on what the economy, what the market, what the Fed does, what the Wall Street Journal Prime looks like. It won't change. There's a little bit of a caveat there because credit card companies and issuers do have the right to update credit card agreements, but they have to do it in writing in a certain amount of days. There's a Credit Card Protection Act that prevents us from doing it in a way that negatively impacts you. So just you're aware. Fixed cards are not very common. And the reason is, honestly, you have anybody paid attention to what the prime rate, what the Fed's been doing recently? I mean, we've gone up over 3% in the Fed target rate over the last year, which means money costs more. So it costs the credit union more money to let you borrow that. So most cards are now variable rates, which basically means we take an index, which is usually the Wall Street Journal prime rate, which right now is at 7%. And we say the rate that we're going to charge you is that index plus a certain amount. Ufirst right now on prime credit charges an additional 4.74%. So you're looking at 11.74% interest rate on a credit card. Pretty good program. And so when that rate goes up and down, you could have less interest charge or you could have more interest charge. A year ago, people were paying 7% on their credit card. Now they're paying 11%. So that's something to remember. If you have a fixed or if you have a variable card, be prepared for these influxes because you could have a higher payment or you could have more money going towards interest from your payment and be harder to pay down. Funds cost more. And then credit cards, you have the option between getting a rewards card or a fixed card, or excuse me, a non-rewards card. Generally, the difference is a non-rewards card has a lower interest rate associated with it. Rewards card has a higher interest rate associated with it because it's providing a rewards option for you. Rewards come back from cash back, to travel discounts, to all sorts of things. I can exchange my points for a gift card to Costco. My wife loves it when I do that. Now I'm going to personally take some time to talk about our credit card because I think we have one of the best credit cards in the industry right now. And this is for general purposes. You can find cards that will benefit you more personally depending on your financial needs or what you're buying. If you're somebody who travels a lot and you like getting travel rewards, our card's probably not going to be the best for you. You probably could go with a Delta or Sky Miles card, something like that. That would be more beneficial for you when it comes to rewards. But all in all, the Ufirst Crimson Rewards card is fantastic. We pay up to 5 times rewards points on U of U campus stores and U of U tuitions. I love U of U tuition. My wife got 2 master's degrees from the University of Utah, and I pay tuition on my credit card from the University of from Ufirst to the University of Utah, and I got a lot of cash back for it. Thank you very much. All right, so utilize that if you have a Ufirst credit card. 4 times rewards on gas, 3 times rewards on purchases from Costco or Sam's Clubs, 3% or 3 times rewards for travel expenses, 2 rewards for restaurants and groceries, and then 1 for everything else. It's a really great rewards card with great rewards options. I can do anything from cashback to Costco cards to travel vouchers, all that sort of stuff. I'm a fan of it. I think it's one of the better cards out in the industry right now. Then there are some other benefits associated with Visa cards. And you'll have to double check with your individual if you have a card, double check with the issuer associated with it because these benefits may apply for you. I do know they apply at Ufirst Credit Union and their credit card. If you do a rental car and you use your Visa Rewards card, you get automatic insurance to protect against damage or theft. Usually your rental company charges like $200 or something like that. It comes free if you use your rewards card. This is my next favorite one. If you pay your credit card bill with your rewards card or with a Visa card on a regular basis, if you lose or damage your cell phone, they actually have coverage for that and could replace it or at least give you some money towards that next replacement. Great option when it comes to using your credit card because you get to pay it easily and you get an added benefit of replacement instead of doing Apple Care or whatever else is out there that's really expensive, right? Then there's some travel accident that doesn't happen very much, and that talks about accidental death and all that sort of stuff. So we don't talk too much about it. Ufirst credit card's an awesome option. So there's that. If you want to talk to somebody about it, we've got a booth back there when it comes to debit cards or credit cards. So you can stop by a branch or you can visit our website and get some more information, and I'm happy to provide that. Let's talk a little bit about credit card key terms. This is some information you should know, help you with the lingo, talking to somebody about credit cards. First off, you got your credit card limit. Your limit is how much you can spend to. A credit card limit could be, I've seen $500 is usually the minimum. I've seen credit card limits as high as like $100,000. Talk about some history and some income that is coming into that wallet to allow a company to say, you can spend $100,000 on our money whenever you want. The other side of the things is your credit card balance. This is what your current balance compared to your limit is. I have a limit of $1,000 and I do a purchase for $500. I've got a $500 balance, right? Balances can include transactional purchases as well as balance transfers or cash advances. You can actually cash advance off your credit card. There's a couple differences in how those are treated from a credit card issuer. If you're purchasing, if you're making a purchase, interest doesn't start accruing immediately. You actually wait till the end of the close cycle and grace period before we start charging interest on those purchases. So if you make a purchase and pay it off, the whole balance before that next payment, you pay us $0 in interest. You just pay us back what you used. Balance transfers and cash advance, interest starts accruing immediately. So you would be required to pay us back what you borrowed plus a little bit more. Interest rate, that's the price you pay for borrowing the money. And then you have APR. Now, APR is a really awesome tool in the financial industry. It's basically created for the consumer to understand and compare one card to another card, one loan to another loan. It makes everything, the playing ground even, so you can look at the difference and say which card's going to cost me more money or what loan's going to cost me more money. So the standard way to compare it is to calculate the APR, you take the interest rate and the fees compared to the amount you borrow and calculate it over 1 year period. So I could have at Ufirst, because we have no annual fees, your interest rate and your APR are going to be basically the same, right? Because we don't charge an annual fee. However, if you go to another credit card and they have an annual fee and an interest rate, you can have an interest rate as low as, I don't know, 5%. But they're also going to charge you $1,000 annual fee. You're going to have an APR into the probably 20%. And that way you can look at it as a consumer and go, oh my goodness, that 5% interest rate sounds awesome, but guess what? This company is going to get their money in one way or another, and they're going to do it through an annual fee. So that's why the industry generally talks on APR standards, because we want you as a consumer to make an educated decision and to have all the details. We talked a little bit about balance transfer. This is basically me saying, hey, I've got $5,000 at Wells Fargo, and I'm going to take that $5,000 off that card and I'm going to transfer it to my Ufirst credit card. Once again, that transaction will start accruing interest immediately, unless they have a little marketing campaign going on where we won't charge you interest on your balance transfers, because we want your balance. Because guess what? They actually make pretty good money off those balances. Right now, Ufirst is actually running a promotion where we pay you 3% of your balance in cash back if you bring it over to us. So pretty nice if you have a balance and you want to bring it over to us. Your minimum payment is how much you owe us to extend your payment to the next month without incurring any charges associated with that, like late payment charges or anything like that. Generally on credit card, your minimum payment is like 2% of the balance, or like $15 or $25, whichever is greater. So credit cards don't take a lot when it comes to the payment, which is why some people utilize them often and actually get themselves in a little bit of trouble, because they say, I can afford $100 off of my, monthly income, but I'm never really touching the balance associated with my credit card. Finally, you got the grace period. I can hit it on this. This is a period between the end of the billing cycle and the date your payment is due. If you make purchases and you pay it off by your next due date, you don't incur any interest charges. So I advise people to use your credit card like a transaction account. Pay it off so you don't have to pay the company that's issuing that card any money, especially if you have rewards associated with it. Basically, you get free rewards. So now, how do you get a credit card? We're going to talk a little bit about credit reports, because that's a key part of this whole process, as well as how to use your credit card to build your credit. There are 3 major credit bureaus in the United States. You've got TransUnion, you got Equifax, and you have Experian. These are just massive, massive data companies. They know more about you than your parents know about you. They probably know about more about your habits than you personally do. They have so much data and information on you. And what they do is they provide that data to build lots of different things. One of those are scores, credit reports. So there are 2 primary credit scoring companies out there. Most of you are probably familiar with FICO, which is Fair Isaac Corporation. This is the most common. It's the oldest one that's used out there. And most people say your FICO score, your credit score are kind of interchangeable. But what they're saying is this company, FICO, is created an algorithm to take all this data from a credit bureau, and they're making a score that determines how good of a borrower you are. The new emerging company is called Vantage, or Vantage Score. This is a cooperative between these 3 major credit bureaus. They said, we want something to compete against FICO, so we're going to make our own scoring model. And it actually was recently announced that mortgages, government-backed mortgages, that sort of stuff, are going to look towards using Vantage in the future. So you now have a competitor with FICO. So when you go to your app for your bank and they give you a credit score, or you go to one credit union and they say your score is a 720, and you go to another institution and they say it's a 740 or something, probably maybe FICO versus Vantage, or a scoring model within those credit scoring companies that's different, because each company has tons of scoring models. FICO has version 2, which is the oldest. It's been around for decades. Utah still uses this a lot. In fact, we still, as the Ufirst credit union, we still price our loans based on V2, which is an old model, but it does predict risk pretty well. You got V8, you got V9, you got V10, you got V10T. These are just all improvements and updates that these companies are making to say, we want to build the best score for people to justify risk or when we're borrowing or lending money. Vantage, same sort of thing, 1.0, 2.0, 3.0, 4.0. As Ufirst, we also utilize Vantage 4.0, which we feel is a great predictor of risk as well. So we use 2 scoring models to make decisions on whether we should give you debt or not. The newer models do something really cool and they start looking at trended data. So back in the day, FICO V2, they just take a snapshot of your information right then and there, and they give you a score. These newer models, much more complicated, way above my knowledge. They use your trended data and they're able to tell me as an underwriter, if your 720 credit score is a 720 that's on its way up and improving, or if you're a 720 on its way down, which I'm going to underwrite differently, because if you're a 720 and you're on your way down, means you might be a bit of a credit risk for me as an institution. Scoring ranges generally go from 300 to 850, higher being better. But within these models and the companies, it could be different. Some could go 350 to 900, etc. But luckily, they've all kind of stuck with the higher score, better score. So let's talk about how a FICO score is basically determined. Now, these are trade secrets by FICO, right? They don't want you to know how to use the data that they have to generate your score, because if they did, they didn't have the secret sauce anymore. Nobody would use it. Nobody would use them anymore. But they have given us a generic approach or a look at how your credit score is generally generated. And this is also specific to each consumer. So if I have a light credit score, some of these percentages might not work exactly. It might be more important to my credit score, my utilization compared to somebody else. But generally speaking, the most influential part of your credit score is how you make your payments on your credit debt. All right. So pay your bills on time. If I can say anything to help you build your credit score and improve your financial life, pay your bills on time. Experian does this cool thing. They do the Experian Boost. Have you heard about that? Anybody heard about that? Basically, Experian goes, how can we do better at including people who aren't necessarily utilizing actual credit, whether it's a credit card, whether it's an auto loan, whether it's a mortgage. And they came up with this brilliant idea that says, if you consistently make payments on your utilities, on your rent or something like that, we can utilize that payment history into your credit score. Because ultimately, what's the credit score's responsibility? To prove your ability to repay debt. So if you pay your utilities on time consistently, you can exercise your right with Experian to boost your score. It doesn't work for TransUnion or Equifax, but I'm pretty confident that each one of those credit bureaus have their own competitors to that approach. Now, the interesting thing about that Experian Boost, it also depends on what model is being used for that. Your old V2 doesn't get the boost. Your newer models, V9, V10, do get that boost. So I'm going into the weeds a little bit on that one, but that's a big popular item out there that you probably see commercials about. So I kind of wanted to hit on it. The other thing is 30%, highly influential, is your amounts owed. Okay. This is on a credit card, for example, this is your balance compared to your limit. Okay. If I, as an underwriter, open up somebody's credit report and I see that you have 3 credit cards and they're all $2,000 limits, and your balance on each one of those cards is close to $2,000, are you a good risk for me as a lender? Probably not. You're not utilizing those cards very well. And I'm worried that if I give you a credit card, you're going to just max that out and then the more risk I have as a lender. Hopefully you keep paying me back, but if you don't, I take a $2,000 loss on my books, which is no fun. When we're talking about credit card utilization, the sweet spot is for your credit limit compared to your credit balance, 30%. 30% or less, it's a bump and a positive to your credit score for the most part. 50% and less, 50 to 30%, kind of a neutral impact to your credit score. If you start utilizing over 50%, it starts hurting your credit score. This is why a lot of people like to have higher limits, because you show capacity to pay in case something crazy happens, and it keeps your utilization low, so your credit score will constantly grow and become better. Credit mix, 10%. This is the type of credit you have on your credit report. Different credit types: mortgage, auto, personal loans, credit cards, etc. Credit history. This is how long you've had your trade lines open, how long you've had a credit card. So the longer you have a credit card and the better you keep that, the higher your credit score will go. So I say, hey, if you're on the fence about getting a credit card, get it, don't use it. Just let it grow and gain you some history. I opened a Wells Fargo card up when I was 20, and I've kept that open this entire time. So it shows that I have a credit line that's been open for, I won't say exactly how long, but a long time. And I've been able to utilize it properly, so it helps my credit score. And then we have 10% in new credit. This is kind of one of the myths about credit. Everybody's so paranoid about inquiries. Don't apply for a credit card. It's going to hurt your credit score because you're going to have an inquiry. An inquiry associated with a credit card or a credit report is basically asking for credit. And the credit companies, both FICO and Vantage, do something specifically where if you apply for a credit in one way or another, they want you to shop around and get the best deal possible. So your inquiry, if I go inquire for a credit card at 3 different companies in a short period of time, it's only counting 1 inquiry on my credit report, and it's not going to hurt me. So don't be afraid to check a few places and have a hard pull, as long as you do it in a short period. Off the top of my head, I think FICO is within 30 days. I think Vantage is within 40 days. Vantage has a very similar setup associated with it. So then it comes to an underwriter. Your application comes to an underwriter. We review a few different things. We look at your employment history, your income history, how much money you're making, what your debts are. We make a decision based on the 5 C's of credit. You can look at them. I won't go over it, but basically we go based on our data and information. Do we think you're going to pay us back? And most of the time, the answer is going to be yes, because we love to lend. So we're going to give you a credit card limit of $2,000. It's usually a great starting spot for somebody who asks for credit. Now I'm going to talk a little bit about tips for using credit cards. I won't go through each one of these individually, but I'm going to give you my personal opinions on how to utilize a credit card. Because a credit card can get you in a lot of trouble, but it can also be an awesome tool for you. I say use it as a transactional card, in the sense that if you don't have the money to pay off that credit card balance or that credit card purchase, don't buy it right now. All right? Swipe that card, get the rewards associated with it, and pay it off before your next billing cycle ends. So I don't have to pay the credit card issuer any sort of interest associated with that. And I get cash back rewards on my tuition. So I save up for my tuition, or however I work it, have that money ready to pay. I swipe my credit card, I get all those cash back rewards, and then I pay off my credit card with the money that I've saved. That's the ideal way to use a credit card. It'll keep you out of trouble. You won't pay any extra funds. Everybody's happy. Technically, the credit card company still makes money. Ufirst still makes money because we get some fees associated with you using it that you don't actually pay. It's better to save now and buy later than buy now and pay later. There's a huge trend in the market right now. It's called buy now, pay later. Everybody's doing it. Amazon's doing it. It says, hey, guess what? You can buy this right now. We'll let you pay it off in the next 3-4 months. You know what? I'm not a fan. Not a fan. But sometimes it has to happen, which leads to the next part of credit cards. It's a great tool for emergencies. If your water heater goes out and you have a credit limit that allows it to, guess what? You can go buy your water heater and make sure you have a warm shower, and then you can pay it off as quickly as possible. Make more than your minimum payments, get that balance down to zero so you don't have to pay anything additional. So those are my 2 tips for using a credit card. Use it only for emergency purchases and transactions, and then use it as a transactional account with the purpose to immediately pay it off. We talked about staying under 30% of your total credit limit, avoid frivolous purchases. Man, you've got a lot of purchasing power in your hand. It's easy to go buy that Xbox right now. You go buy a PlayStation. It's easy to go have that really fancy dinner and have a little bit of extra on the side, you know. Guess what? That's going to hurt you in the long run, because if you're not prepared to pay it off immediately, if you don't have those funds for it, you're going to pay us a little bit extra. Those frivolous purchases tend to add up. I was talking to my chief lending officer, and he was sharing me a story of somebody he knows. He's like, yeah, they kept getting credit card offers in the mail. Like, hey, you're approved for $10,000, and he kept accepting them, and then he would just use them for random things. He was treating his family to a little bit fancier vacations than he usually does. And he said, suddenly I realized I was $35,000 in credit card debt. I could handle the monthly payments, but I was never going to pay off that debt. So he had to use some tactics to get out of debt. And it's really easy to do that. So be careful with how you spend and how you use your card. And then review your transactions regularly. There's fraud associated with credit cards and debit cards. If you haven't experienced fraud on your card, you will. It happens. People are really smart, and unfortunately they're using it in a way to defraud people and take money. Cards have protections associated with them. You could be liable up to $50 on your credit card. You could be liable for a little bit more on a debit card. So if you lose your credit card or your debit card, immediately report that, because you don't want to be liable for any charges. Credit cards are maxed at 50. Debit cards, they're maxed at 50 if you report it within 48 hours. If you report it within 60 days, you're liable up to $500. And if you don't report a lost car, stolen card till past 60 days, you could be 100% liable for any charges. So make sure you report it. Ufirst, we offer a 0% fraud liability cost. That means if it's fraud, you're not going to have to pay anything. We're going to take care of it for you. A lot of credit card companies do that. Some don't. So pay attention. And then once you report it, generally what happens, call up your credit card company and say, hey, got fraud. They look into it. They provide you a provisional credit because, hey, you could be out $500. They'll give you that $500 back. They'll do a little bit more research on it. They find out that it's fraud on your behalf, you're in trouble. But if not, generally they're going to take care of you, make sure you're in a good situation. It happens. And usually that person who steals your information, they do a little test run. It's like, oh, somebody just spent $50 at Walmart. And usually you get a warning on your phone or a text message or your email banking. And that's the company saying, hey, we see something a little irregular. You should take care of this or block the card if it's not you. Because if you don't, then the guy's, I shouldn't say the guy, the person is like, sweet, now I can go buy the big screen and the Xbox on this. Pretty soon it goes up really high. And generally you won't be responsible for it, but us as a company, we have to eat that cost when it hurts. Credit cards, what you use when something costs too much and you want to pay even more for it. I love this comment because it's so true. Credit cards can get you in trouble. 2022 credit card debt statistics. You see credit card balances are going up again. It's from 2008 to 2022 quarter two. We're almost at, as a country, $900 billion in credit card debt. Oh, ouch. Some more statistics. According to Wallet Hub, the average credit and credit card debt per household stands at nearly $9,000. People want what they want and they want it now. I'll worry about it later. Of all active card accounts, 45% of card accounts carry balances from one month to another. That means they're paying additionally some interest associated with all those charges they're making. And this is the scary one. And I don't want to use this to scare people away from getting a credit card, because like I said, credit cards are a great option. I've got tons of cash back from utilizing my credit card, but utilizing it properly. Take a $5,000 credit card debt, $5,000. Charge the average APR on that, which was in 2021, 20.28%. Make your minimum payments, 2% of your balance. You're paying on that sucker for over 30 years. And you're paying over $23,000, $5,000. Wow. So utilize your credit cards properly. Be smart with those transactions. Don't use it as a frivolous purchases whenever I want, but use it as a tool that can benefit you and expand your purchasing power. Oh, it's sure nice to go to Amazon and buy something with my credit card and get it sometimes the very same day, right? Okay, now I wanted to jump into paying off your debt utilization. You've got some awesome resources over here. They will certainly help you if you're in debt and you're having a hard time getting out of it. There's a couple of ways to pay off debt. The snowball approach, which is pay your small ones first and keep that momentum going. Mathematically correct and faster payoff strategy is pay your highest interest rates off fast or first, and then move to the lower interest rates. But sometimes you lose momentum doing that. Consolidate your debt. Look for 0% interest rates for the length of a certain amount of time. Make sure you don't go past that. It can save you some money on paying interest. And consolidating debt. A lot of people that I see that have a lot of credit card debt, the only way that they're going to get out of it is they take their equity in their home, they do a new mortgage, they take $30,000 cash out, pay off their credit card debt, and they're paying on their mortgage, which is a great option for a lot of people. Unfortunately, I also see people who do that, never cut off their credit cards and never change their purchasing habits. And in 2 years, they've got a higher mortgage and they've got $30,000 worth of credit card debt. Bad news. These are some of the questions that were submitted, so I'm going to try to hit them. What time do we want to end?
We're good. We've got about 5 more minutes.
Okay. So I want to hit these and then we can open it up for some questions as well. If we have a little bit of time, I'm going to kind of haul through these. Hopefully I will do them justice. Question was asked, how can I get a credit card with no job and when? Couple options associated with this. Ufirst specifically, we offer a shared secured card, which basically means you give us $500 that we hold in an account and we give you a $500 credit limit. Now, we don't want to give you credit card debt or debt in general if you do not have an ability to repay that debt. So you need to have some sort of cash flow coming in. We're a lot more liberal when that requirement on a shared secured. So if you're getting money from your parents, if you're getting money from a source that is not like W-2 or 1099, we can use that to help you get that. That's a low risk opportunity for us as a credit union. It gives you a chance to build some credit. The other thing is you get a co-signer. You get somebody who's financially responsible for you that's willing to put up their credit, their income to help you get a card. Should I always try to use as much of my credit as I can, given that I can pay it off? Nah. In fact, this could actually get you in trouble because credit companies or financial institutions distribute their information to credit bureaus at different times. I knew a person in the industry that did a little test. He generally is the sort of person that pays off his credit card at zero at every time. So he carried a large balance, he pays it off, but he waited until after that cutoff date when somebody sends their credit information to the credit bureaus. So according to the credit bureau, he had like a $5,000 balance out of a $6,000 limit, and his credit score that month alone dropped 40 points. Okay? So you have to be a little bit careful. You have to know when your credit companies are dispersing their information to the credit bureaus if you want to play that game. The good news is once he paid off that debt and it reported again the next month, his credit score jumped back up. What is a good APR? Credit unions will offer you an APR below 18%. Okay? I would say go to a credit union, get a card there. It's going to be the safe bet. Once again, maybe APR is not a big deal for you if you're going to use it as a transactional account and you're going to pay it off immediately. What are perks that come with getting a percentage back from using your credit card? We talked about those perks. You have cash back, gift cards, all the sorts of stuff like that. How much time should I wait before I get a second credit card so it doesn't hurt my credit score? Anytime you open up a credit trade line, it's going to hurt your credit score. The earlier you do it, the more time you're going to have for your credit score to recover and get back to where you want it to be. So as long as you're prepared for that drop initially, go do it right now. Do a little research, determine which card is best for you, but go and do it right now if you're looking to build credit. We'll go back to that little graph associated with Vantage and FICO, how they determine scores. More trade lines and diverse trade lines you have are a good thing as long as you don't get excessive with them. They usually say 2 to 3 credit cards is kind of where you should be at. And if you're at there and you want to build your credit score, maybe increasing your limit is the best option. Which card gives the best benefits? That's a personal thing for you. Where do you spend your money? You spend your money paying tuition at the University of Utah, Ufirst credit card is probably going to be a great option for you. If you spend your money traveling, maybe your Delta Sky Miles card will be your best option. But there are going to be annual fees associated with some cards, interest rate, other fees, other transaction costs. Just pay attention and read your information and do your research. Nerd Wallet is a great source to look at. Nerd Wallet. They'll give you a list of great credit card options in the market right now. How does a credit card / credit score affect my chances of getting a cheap mortgage? Higher your credit score, your lower your interest rate is going to be. All right, so it's going to save you money. If you have a high credit score, your interest rate is going to be lower. You're going to save a whole lot of money. It's kind of depressing when you get a mortgage because it tells you your APR, your interest rate. It says you're borrowing, I don't know, $300,000. I wish in this market, $300,000, and it says if you follow the payment scale of 30 months, you're going to end up paying $900,000 or something ridiculous. The cost of interest. So, and so the lower you can make that interest rate and your APR, more money you'll save in the long run. What's your best advice against impulsive thoughts with spending? They're a good method to fight against those impulsive thoughts. Very individualized. If you're an impulsive buyer, I don't go to the grocery store when I'm hungry. Bad news. I end up with way too many cookies. I limit my trips to Costco because no matter when if I'm just going to Costco for that stupid grill, that rotisserie chicken, I walk out the door with $200 in stuff. Avoid situations where it's easy to spend money if that's your concern. Don't give Amazon your information so it can be a one-click buy now situation. Right? Recognize your habits, recognize where you're spending your money. And then remember that there's going to be a cost in the long run if you don't really have that. All right, I'll run through those questions really fast. Hopefully it did justice. Is there any questions here? We got about, what, 30 seconds? Overall, credit cards are a great financial tool. They'll help build your credit, which will save you money when you go to buy an auto loan or get a house in the future. Okay? Don't be scared of credit cards, but be smart with them. Use them properly. If you need more advice on how to do that, Ufirst is a great place to go. Financial Wellness Center is a great place to go. The more education you get about finances, the better you'll be in the future. Thanks for your time. I appreciate it. Good luck.